Welcome back. Let's get into your market movement now. And China's stocks closed lower today with the benchmark Shanghai index ending at a 3-month low as doubts emerged regarding the prospects of that China-US tariff talk amid fresh trade war headlines. Now, Sino-US tensions flared after the US government's decision yesterday to sign a bill backing anti-government protesters back in Hong Kong. China warned the United States on Thursday that it would take firm countermeasures in response to US legislation backing anti-government protesters in Hong Kong. Now, the Shanghai Composite Index did end the day down 0.6%, so that sits at 2,871 points, the lowest closing level since August 26. The Hang Seng also ended down on the day, actually, closing down to 26,346 points. Japan's Nikkei closing just around 0.5% lower as well, 23,293 points. Take a look now at how markets are faring out in Europe. Of course, the interesting elements here have certainly been that trade war with China and the United States, but with no real deal in mind right now. Well, we're finding that things are perhaps a little slower for trade. Bit of a mixed picture for now. London and Germany sitting slightly lower this afternoon, while the CAC 40 out in France is headed higher for now. On the local front, well, we're seeing some gains across the financial counters, but the all-share itself not doing too well, having sat above 56,000 points yesterday. Today, dipping below that mark again. A fall of around 0.5% yesterday at this time, and a similar mark then today as well. Industrials also then dipping lower. Onto your commodity shares. Well, gold counters were the ones that headed higher yesterday, but it's not to be today. Those go down, so too do platinum shares, while the overall resource shares have had a bad day thus far. And onto your commodities themselves, well, gold is still sitting below that 1,500 level and seems steady at 14.5 there by the looks of things. $896 a fine ounce for platinum, with oil headed lower, $63.58 a barrel. It was pretty much a muted day for the oil price considering the Thanksgiving holiday out in the United States, so not too much to write home about overnight as things begin to perhaps get into action now as the rest of the world gets into that market movement. Over into your local currency then, and the rand against the major counters there, 14.65, an improvement there for the local currency, having opened at around 14.75 odd against that US dollar. And then the British pound, 18.18 and 18.88 should I say, dipping below that 19 rand mark, and 16.11 as well against the euro. The BRICS currencies, well, yesterday was a good day for them. And today is pretty much the same thing as well. 349 for the real. The rupee in India is at 20 cents there, and 22 cents then for a Russian ruble. All right, let's unpack that market picture a little bit more perhaps now and get some sense and a sentiment really with regards to the market picture for the week and how things have fared. Warwick Lucas from Galileo Capital joining us here in studio. Warwick, thank you so much for the time. Appreciate it. The trade war has always been the hot topic, shall we say. And now with no deal in sight after the United States decided to back Hong Kong, it's become an on again, off again, on again, off again. Where we sit now.
Hasn't it just? Well, I think a lot of folks would look at the situation and say, why on earth would the US be concerning itself with an apparently peripheral issue in the form of Hong Kong? And the answer to that is it's all about treaties and honouring them. In the case of Hong Kong, there is a treaty struck in 1984 that governs the issue. The Chinese government are seriously close to breaching some of the terms of that treaty, which runs until approximately 2047. And so in an environment in which you're trying to negotiate another treaty, to see a major treaty get breached is obviously an incongruency that just can't be allowed. And so it's a major, it seems peripheral, but actually it's certainly on a political point of view, quite a central issue. Yeah,
no, certainly is. And of course, unable to sort of get some sort of thoughts right now because obviously the United States was celebrating Thanksgiving holiday. It's about to be a really interesting rest of the week rather for them as Black Friday kicks in very soon as well. If we talk then, you know, and we perhaps bring it in a little bit and really just talk about South Africa's market right now. I mean, yes, we're currently experiencing Black Friday, which I'm sure retailers would love to have been every day this year. Their business models this year, do you think it gives a sense to how interesting things have shifted, perhaps South Africans getting a little bit more involved. It could perhaps even be the biggest Black Friday yet.
Yeah, I mean, certainly it's been gaining traction. I mean, traditionally Black Friday was all about retailers clearing the decks, as it were, making shelf space available for new product to come through. And certainly when you've had a consumer as embattled as a South African consumer, that extra sort of bargain counts even more.
Yeah. Are you getting involved at all today?
No time.
No time for it. Okay. Well, anyway. There's also just, the unfortunate plethora of earnings that we received this week, and today's no different.
Yeah, absolutely. I mean, we continue to see cyclical companies experiencing some really very tough earnings environments. We saw Pumalela out today. I mean, that was a pretty dismal set of earnings, made worse by more recent developments, certainly in terms of the Gauteng Gambling Board's determination about levies on horse racing. So, it's definitely all systems down for them, I'm afraid.
Yeah, it doesn't get much easier in an environment where you're hoping that consumers can bail you out, if you want to call it that, and yet they're also just strung up. And one of the things that they won't be able to spend on is leisure or luxuries as much as they used to.
Very much so. It's a discretionary spend item, and I mean those are some of the first to go when the economy hit the skids.
Yeah, the rand pretty stable and even doing perhaps a little bit better than some would have expected. We got Eskom's news yesterday, and the rand somewhat didn't shoot the lights out. Perhaps expecting a similar sort of loss anyway of around 20 billion rand odd. Are you excited that the rand is at least showing that resilience, or are we all just awaiting perhaps further news from ratings agencies early next year as well?
I think we're very much in a news waiting mode. I mean, for example, consumer confidence data, I mean, well, it bounced off a 20-year low, but the point is it's off a 20-year low. So there's a small zig after a very bad zag.
Yeah.
And obviously the hope is that it's in the right direction. Eskom seems encouraging, but I think we're also waiting to see final news on what's really going to be done about SAA.
Yeah. Look, the proof of the pudding is in the eating. Warwick, appreciate the time. Thank you so much for it. Always good chatting to you on a Friday. And Warwick Lucas from Galileo Capital helping us unpack that market movement there as well.